Ministers, thank you both for joining me, and congratulations on your JMMC. You talked a lot about this cooperation beyond 2018, but what does that exactly mean? Does that mean we'll see an extension of these cuts?
Well, I think what we imply to say is that given the volatility of the oil market, which has been proven time and time again, we need to have enough producers ready to intervene at the appropriate time to adjust production, to deal with fundamentals and with market shocks. In the old days, it used to be OPEC. OPEC countries controlled enough of global production and global exports to be able to have that influence. Today, given the size of the market, we're approaching 100 million barrels per day of oil demand. OPEC is about 34 or so. So we don't feel that OPEC alone can do it. That's why we waited until we had enough non-OPEC countries, led by Russia, to come together in late 2016 and announce the declaration of cooperation that started in January 2017. It's been very successful. The results speak for themselves. Compliance in December of 2017 is at a record 129%. Unthinkable when we started. So now we need to think of, as we approach the rebalancing by the end of 2018, what do we do beyond? My personal belief is that we need to extend the framework, but not necessarily the production limits. So it's the framework that we are formalizing, hopefully, as a minimum, keeping the contacts between OPEC and non-OPEC, and finding a way to be able to get together quickly and not wait a year of negotiations and deliberations.
And Mr. Novak, you're on board with this continued cooperation. What kind of mechanisms do you think need to be in place for this?
We assume that cooperation between our countries is long-term, and regardless of whether it is in terms of the market stabilization or other areas. Our cooperation is based on the agreements we have signed in China back in 2016 in September, and I think over the past 1.5 years that we have been actively implementing this, we have shown a lot of success. We had a successful run. Two biggest exporters, which jointly produce around 22 million barrels per day, cannot ignore each other, cannot avoid to cooperate. We believe that cooperation can be done in order to help stabilize the market, or it can be done in other areas of the economy. And once again, I would like to stress that 2 years of success, almost 2 years of success, have shown this. We would continue cooperating regardless of whether we need to extend the cuts or not, because that could help the market, that would help both consumers and producers. And I would like to remind that we have also signed a roadmap and an agreement to cooperate broadly in the economic sense, which has more than 30 potential prospective projects which we're talking about together.
I imagine both of you are very happy with the current price of oil. Brent is trading just under $70 a barrel at the moment. But how sustainable is this current price?
Well, I mean, we certainly did not target any specific price when we entered into this declaration of cooperation. And we've always said that markets will set the price that is appropriate for, for bringing enough supply to meet demand and to offset natural decline which is taking place. Despite the higher prompt price at the end of 2017 than at the beginning of 2017, we're not seeing the future prices moving sufficiently high to bring in a lot of investments. So one of the parameters I look at to indicate the health and stability of long-term supply is how much investment is coming in. We've seen an uptick, and not substantial, by the way. And short cycle oil, the number of rigs that are drilling in the U.S. are certainly higher year end than they were at the beginning of the year, but not nearly near the record levels that we saw in 2014. But long cycle projects that are needed, that require tens of billions of dollars and 7 to 8 year investment timeframes are not coming back. And when you think of 1.5 million increases in demand year on year, when you think of declines of 3 to 5 million barrels from existing production, one has to ask themselves, how are we going to offset this? And that needs financial flows. That needs a lot of capital. That needs confidence by investors that the market has structurally shifted into a healthy zone where, and I don't think we're there yet.
Do you see the price continuing to 65, 70 for the rest of the year?
I'm not going to predict prices, but I think the prices will settle when we see enough investment coming in to provide enough supply.
Are you worried about the shale supply?
I am not worried about the shale supply. I think shale will be accommodated within the kind of demand growth that we have seen, and also to offset. As we talk about shale in the U.S., we need to see the declines in Mexico and Venezuela, and oil sands in Canada. So when you net it all together, you're not seeing anything that moves the needle just in the Americas region, not to mention declines in the North Sea, in China, elsewhere, growth in demand. So I'm not concerned at all about shale.
So, Mr. Novak, how close are we then to a rebalancing act, a rebalancing of the market? Mr. Al-Falih says we're seeing shale being offset. We have prices 65, 70. Where are we going to be rebalanced?
It's an interesting question. So today at the JMMC, we have actually analyzed and reviewed the OPEC Secretariat material and the GTC material, which has been presented to us, and looked at a large number of scenarios. So some of them say third quarter, some of them say fourth quarter, but there are a lot of moving parts in that equation, and the market is very volatile. What I think is more important at this point is that despite us seeing healthy results, we have all to be focused on reaching our aim and our goal of a balanced market. We're going to gather together again in June at the ministerial meeting, and we're going to look at how the market progresses. We're going to look at all the fundamentals, and then we'll discuss again what needs to be done in either direction.
But Mr. Novak, what do you think of prices? Do you think $65, $70 a barrel could last for 2018?
I think I would have to agree that pricing is not one of the metrics that we look at when we do our analysis and we make decisions. We look at fundamentals because this is what matters for the market, for longer-term stability. If it was only the price which was the key for us, I think this would be wrong for the market. We need a stable, predictable, and with small volatility market. We need to remove the overhang of inventories so that it doesn't put pressure on fundamentals. And of course, in order for us to be able to assess all that, we need a longer period of monitoring, and that will allow us to ignore the short-term volatility which we're seeing and the very short-term opportunistic factors which could be affecting the price in the moment. Overall, I would say that I'm optimistic about 2018, and just looking at the low demand season which we have all been expecting to come, which comes every year, I can say that so far it's faring better than analysis showed before and better than we were expecting. So I look at it with optimism.